as you guys can see, price is making higher highs, higher lows, higher highs, higher lows, right? If we take a look at our exchange rates, we can see that the exchange rates numbers are pushing up. You guys know when it comes to reading trend, or if you don't know, I always think, if you just look at the last two highs and lows, it will tell you what you need to know. No matter what time frame it is, it could be monthly, weekly, daily, 4 hour. The prime 4 time frames. It will tell you what you need to know. We're pushing up, right? We needed to see price stay above 117s. That's what we needed to see. And as you guys can see, price is still trading above 117s. And what could really have made the difference in the market for this week, this is Friday, Thursday, Wednesday, Tuesday, Monday, is this one candle right here, okay? So following this bearish rejection candle, this candle closed on a Friday. In my mind, this is how I look at things, you guys. This is how I talk to myself when I'm trading. For one, where do I need to participate? I need price to stay above this number here. So already I'm going to zone out an area I need price to stay above. I need to stay above this candle because this exchange rate is attached to that candle, okay? Which means the range that I am looking at is a range of about 105 pips that I know the market can come and test. I'm okay with it testing that range as long as price does not go below that number. Okay, so that's number one, this trend, because the exchange rate is pushing up. Number two is structure. If price can give me bullish information here, this is how you got to talk to yourself. Like, you got to kind of reason. All right, price, I need you to give me some bullish type of information. If you can give me bullish information, I will be more inclined to buy. That's it, right? So we got an inverted hammer. That's one of our leading candles. If you're a confirmation candle trader like me, I need to sometimes see color, and sometimes I just need to see that the next candle is gonna be pushing up for me because I'm very conservative. It was this candle right here. This was my entry candle. This candle I entered on last week on Tuesday at 5 o'clock p.m. Eastern Standard Time. Okay, that's the entry candle. My exits, or one of my exits, is back up to the previous high right here. Okay, whether it goes there or not, I'm following my system. I'm following my rules because price is going higher. I'm not trading candle by candle. I'm just trading the set of numbers. Okay, so that was my entry. So I'm going to be honest. I'm not looking to enter into any more trades on Euro USD this week. I'm looking to see, because now I have to manage my positions. By managing my positions, I'm just trying to see if it'll continue to push up so I can get out of the trade and make my money.
For a trade update, you guys can now see that price has hit the first target back up to the previous high. And now for a teaching moment within the Swing Trading Society.
I wanted to see if it was going to up higher. Yeah, that one. I wanted to see if it was going to break above that and then come back down and retest. So that's what I was kind of waiting on.
You want retest all the way down here?
No. I was going to see if it was going to break above. You got to move your arrow up to that, like that doji right before. Yeah, that one.
Oh, so you were looking for like a break and retest or something, right?
Yeah.
Okay. So I can see where you're looking at the channel, right? And it's not to say that it still can't happen, but for the most part, this is why trading with the trend is very important. And it's not to say that all the other rules can't be met and that they're not important, but remember, don't give yourself extra steps when you don't have to.
Right.
Because if the market gives you your entry already, take it, roll with it, then trade the extra thought. But at least you're already in there. So you can cover, because let's say that you're a person who likes to move your trades to break even when you're in profit, right? This could have been a chance to say, hey, let me roll my stocks to break even so I don't lose money, so I can add on in case the market does what I needed to do.
So as you guys can see with this particular trade, it was a really, really good trend continuation trade setup. And so once I got the signal, I just went ahead and took the trade. And the signal was price is staying below the last exchange rates around the $1.17 areas. It's giving us a leading candle, which was a rejection candle. And then it had a doji and then a confirmation candle, which was the confirmation to go ahead and enter. And then all I had to do was just push the button and allow the trades to hit for targets. And then just, chill out for the rest of the week. And now today, Monday, which is 4 trading days later, I am now out of the position. That's it. This is how we swing trade. So, as you guys also heard me speaking with a member within the swing trading society, one of the things that he said, which was very important, was he saw what was happening, but what he was waiting on was for price to continue up, to break one of the high points, one of the high exchange rates, for a break and retest of his resistance to turn into support, and then he would buy. But price had already showed his hand. And what I've learned is sometimes when you create extra steps, what you're allowing price to do is you're allowing price to get away from you. And that's not what we want to do as traders. So my note to you guys is this: don't create extra steps when price has already given you the signal to enter the trade. Once price tells you to push that button, push that button. Because one of the worst things you can do is be in the trade and watch it get away from you. Trust me, I've done it before. There are times when I still do it. And then you better believe there are a lot of traders who still do that to this day. And they'll tell you that's one of the worst feelings in the world. So no, you can't catch them all. But when you have the good setup in front of you, you don't want to create extra steps. So let's go on and let's move on to the dollar index.
What I'm basically looking at is if this is a true lower high and this is a true lower low, and price is really in this downtrend, I'm looking to see if the $92 areas can be taken out and price continue down. This is what's going to help us understand if price is still in a bearish play. Because if so, Euro USD to the upside, it's going to be the good play. Because if it's mirroring, I want it to mirror. Now, with that being said, if price is going to continue to push down on this pair, I'm going to look to see if USD Swiss will continue down, because Euro USD and USD Swiss correlate negatively. So I'm going to go to that currency pair.
So before we get into USD Swiss, let's go ahead and look at the dollar index really quick. As you guys can see by the wick, price has now fell below the last lower low here on the dollar index on the daily time frame. It's now pushed past $92.13. We have now hit $92 even, which means we have a new lower low on the dollar index, which does implicate and does show that price wanted to continue the bearish momentum from the $93.90 area. Once again, this is why we follow the trend, because it shows and gives us really great detail on where price can go to next. And guess what? If your system is really good and you have it set up to where it's a really good trend trading system, you get to catch pairs and you get to catch winning trades, just like we did here on Euro USD and USD Swiss. So let's go ahead and let's get into USD Swiss and listen to what's being said here, okay?
Now, I'm still holding sales on this pair.
Oh my God, I'm trying to do something.
You better move, boy. Your mom.
Sorry. Oh, I didn't know my mute wasn't on. Sorry.
So, with that being said, hey, I had to do the same thing when I came home. My daughter was like, "Mommy," and I was like, "No, it's work time for mommy still. It's still work day." So, I've been in this pair ever since back here. So I've been in since August 12th. And I've been holding my sales. I held through this real bullish candle, this real big bullish candle, the bearish candle. I've been holding the pair. I'm thinking, just like how I'm looking at the DAXI or dollar strength index, if price continues down, then we can come and outperform. I need to keep it the same, but I'm thinking we can come and outperform the 90-cent area here on USD Swiss, continue down back into $89 areas. Okay, that's how I'm looking at this pair. I know B, you're still holding this position. You've been holding this one for a while too, and maybe you could talk about a little bit about your experience on this pair. But this is how I'm looking at it. So if you're in this pair too, it's just a good hold for right now. We don't have anything else to do, so that's just what it is. Okay.
So you guys, this is another completed trade that I am now out of. It has come to hit my target, and I'll go ahead and give my conclusion after another teaching moment with another student here at the Swing Trading Society. So go ahead and take a listen to this.
Okay. So B, what's your experience been like with this currency pair? Because I know you're still holding it.
Yes, I've been holding since the 12th. I'm in profit, so I'm going to wait and see if it hit that my negative 27. If I know, I said earlier last week, I said if I was in drawdown, I was going to exit, but it kind of turned around. So
okay, so that's an interesting statement. If you're in drawdown, then you're going to exit Y.
I don't know. It's I was just tired of being in it.
But is there ever a good reason to exit a position?
No, but with my account size, I could have entered in a different trade.
What do you mean?
Like Euro USD. Like if I had been in drawdown on in US Swiss, I would have exit my position and entered another position on Euro USD.
Mm-hmm. So you would have taken a loss to enter into a trade that hasn't hit yet, but this one would have still put you in profit, right?
If I was in drawdown, yes.
Okay, so think backwards. Think backwards, because if you think about it, Euro USD could have put you in drawdown 2 this week for 2 days straight.
Mm-hmm.
And would you still have exited that and said, well, maybe let me change and go to USD Swiss? I mean, either way, you're going to be in drawdown.
Right.
You see what I mean?
Because I've been holding it since the 12th, you know? I prefer to be out of my trades like within 2 weeks.
Okay. We don't control time.
Yeah, that's true.
We don't control time. You could have entered this on a 1 minute time frame and still been in drawdown.
Mm-hmm.
We don't control the time. What we control is our analysis. It's good analysis. You just have to wait for price to go your way. This is a patience game, right? Now I can understand if it was choppy. You know, if we had some choppiness, this is only consolidation period. We don't control consolidation, right? So, you know, just think about that. If in here, let me give you the biggest tip. If you got two currency pairs that correlate, whether it's oppositely or negatively, instead of thinking, hey, let me put my money in both of these pairs, just think which one of these two pairs has the best setup. Because you've been holding USD Swiss before Euro USD, right? So you had no idea that the consolidation would hit. So it's really not a fair comparison. But what I'm just trying to say is, before you ever enter into a trade, if you're trading more than one currency pair, which one has the highest probability success rate? That's it. And it has to be the one that's fitting your rules almost 100%. Can I check the trend off? Yes. Can I check off the structure? Yes. Is it giving me my leading candle? Yes. And just let it go. Because drawdown turns into profits too. So that's just my biggest tip for y'all, okay?
Here's my takeaway with USD Swiss and just bringing this in full circle. So as you guys can see, with the dollar index continuing down and Euro USD continuing up, USD Swiss, as you guys can see, it does follow more so of the dollar index, and it does trade oppositely of the Euro USD. And so these two pairs pit against each other just makes for really good hedge trades, which means you can be in a buy position on one and a sell position on the other, just like how I was here. So this is just an example of how to trade correlating pairs that move opposite of one another, so you can double and maximize your profits. And that's what I did here. Now what I want you guys to notice is something very particular though. Did you guys notice how I was in the trade on USD Swiss longer than I was in the trade on Euro USD? I'm going to be honest, that can happen from time to time. And if you notice in a teaching moment when I was talking to my student, she said, hey, Shaquan, you know, I'm okay with being in a trade for a week or two, but what I'm not okay with is being in drawdown. And my suggestion to that was, or my response to that was, you cannot control drawdown. You cannot control how this market moves. And what we don't want to do is think that we can be in control of it. And if it's not moving our way, we can just exit, even if it's for a loss. That's one of the things that you don't want to that you don't want to do as a trader, right? Because for one, we're not fortune tellers. We can't say what the market's going to do, and we can't think that it has to do it just because we feel like it has to do it, right? And if you notice this here, also, you know, what my response was, no matter what she would have done in any situation, she was going to be in drawdown, because price on Euro USD moved sideways for 2 to 3 days. The difference was USD Swiss moved sideways for a little over a week. Now, is that frustrating? Yes. However, her analysis was correct. So what do you guys would have thought would have happened if she would have got out of her USD Swiss trade and then to have found that it went her way? Do you guys think that she would have had a positive response to it? Now, mind you, she was already, and this is the part that you guys didn't know, she was already in a Euro USD trade to the upside. And basically what she was just, reiterating was she could have entered again on Euro USD. So either way, she was in profit. She just really wanted to maximize again and get in again on Euro USD. So, with that being said, you guys, she had a win-win situation. But with the mindset of, if price keeps putting me in drawdown, I don't want to stay in that trade. That's kind of a mindset we don't want to have, because once again, we cannot control the drawdown, because like I said, there's always a different side. Drawdown can put you into profit. What happens if that drawdown turns into money that you could never collect? What do you think your mindset will be then? And that's the challenge. You have to change that negative thought to want to get out just because it's not going your way. See your trade through. Have mental toughness. Okay, so you guys, I hope you guys really enjoyed this video. And if you like this type of trade talk and listening to the way I respond and coach my students through, let me know. Do you guys enjoy it? I'll put a poll up. If you enjoy it, say yes. If you don't, just say no. It's okay. I understand, right? And if you enjoy this video, you guys, make sure you hit that thumbs up button. Make sure you guys subscribe. And if you'd like to join the Swing Trading Society, make sure you click the link down below to join in. And I will see you this Wednesday in our back testing session. So you guys have a great trading week. I'll see you guys on Wednesday. You guys be blessed.